Ho, 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 everybody. Happy holidays. You're watching the Stock Market Brief Show, where we navigate the financial markets through the lens of technical and intramarket analysis. Sorry if it's a little echoey in here. I don't feel like getting everything all set up to dampen the voice. It's going to be a very short market brief today. I wasn't planning on doing one. I got hung up. You know, I got a child I'm taking care of, and Mama's back at work, so I got to do what I got to do when I'm at home. So we're not even going to do an intro. We're going to hop right into it. I know what everyone's thinking about. They're thinking about this large sell-off that took off today. It was a massive volume. Where did it come from? And that's a lot of question on a lot of people's minds. It could be various different things, okay? What we did notice here was there was massive put volume taking place. So a lot of zero-date options could have caused this market to sell off. You see the futures going, you see these put volumes really start to increase there, which caused a massive move in the overall markets. Obviously, this is, nothing to just, look over. These are large multiple standard deviation moves, right? 2 standard deviation moves in the market. And you can see over here, all the 11 sectors were down in the S&P 500. I will note that the risk-off assets, right, typically those are at the bottom of the list. So that is a little bit interesting to me. And this move right here itself put it down to the low of the week. And then when you're looking at the weekly candle of the SPX, the 5 weekly period moving average is still moving up. And obviously we've had 1, 2, 3, 4, 5, 6, 7, 8 weeks or whatever up straight, and we're getting very extended from that 5 weekly period moving average. And as we've pointed out many times, when you get very extended, you get snapbacks, right? When you get very extended, you get snapbacks. When you get very extended, you get snapbacks. And what we're seeing right now is potentially just one of those snapbacks to and around that area. So it's nothing to be overly dramatic about at this given time. Yes, on the daily time frame, if you zoom out, right, and just take a look, the trend is still actually up at this current moment. We had an outside trading day. So it's really about finding if we're going to have continuation to the downside, okay? So we'll get a little bit more tactical looking at the 15-minute time frame. This is, once we get into the gamma exposure levels and stuff like that, I'll get even more tactical. But as you can see, we came up to that weekly expected move, and we said if you get outside of it a little bit more, we can potentially come around and kind of just work around the weekly expected move. But you can see we broke down within it. Remember, 68% of the time, we closed within it. So as it stands right now, the market's doing exactly what the market said it was going to do on the close of last Friday. So we're right there, basically unchanged for the week for the most part, but this is where things get interesting. We closed below the inclining 5-day moving average. All right, it's still inclining. Yeah, we have a subtle turnover here, but it is overall still inclining. So what does that mean? It means you're bearish, but it's with some caution because we can snap back really quick. So what happens if we snap back? Well, potentially, let's take a look at some levels. The week to date anchored VWAP could be one of those levels as it's starting to curl back down and decline. If we start moving up, take a look at the SPY at 471.79. That's the upper daily expected move. And if these are curling back over, we get a snapback, that could be a potential area of resistance. And if it holds, we may see further downside, something like that, right? Boom. Or it heads lower. The lower daily expected move is 464.73. The lower weekly expected move is 463. Download the chart deck if you want these levels and to put them on your charts. If we look at gamma exposure levels, this is the first time for a while that we actually closed in negative gamma territory. Okay, so remember, we've been talking about this. Now breakout traders need to be careful, right? I'm a breakout trader, so my positions, they've been minimalized not only because we're where we are now, but because we've been running up, right? You want to seal in some of those profits. So as we tagged up into that weekly expected move, we held as resistance, right? And we started really just massively selling off. But now, what we got to pay attention to here is the reason why I say this is not a good environment for breakout traders is because when we're in negative gamma territory, this is where dealers look to sell into weakness and buy into strength. So this creates very, very volatile price swings in the market. You can see massive move down, but you can see rip your face off rallies right back up. Okay, so that's what happens when you're in negative gamma territory. When you're back above this line, you'll be looking for dealers to sell into strength, buy into weakness, and which is where we've been, right? We've been in for quite some time, and we kind of just slowly dragged higher, had some strong days, and we kind of just consistently moved slowly but surely to the upside, okay? Another thing to pay attention to is obviously the 5-day moving average. We're below that. So now we're below the gamma flip. Now we're below the 5-day. So if you see a nice setup for a breakout trade, just be more careful because a lot of the flow happens to come from obviously the S&P 500. And if the S&P 500 wants to bring in volatility, it could very well affect a lot of breakout trades where you get breakouts and then you get fake outs. Okay, that's just what happens. And that's what I've noticed over time doing breakout strategies. So be careful in obviously this environment. But that's where we stand right now. Where can we be tomorrow? Well, we can be right back up into this area, right? So there's a couple areas I want to pay attention to. Local resistance is 47.50, okay? And then local support is going to be 46.90. That's going to be the gamma exposure, local resistance, local support. Going down to the bottom, the daily expected move is roughly right around the weekly expected move. So if we get further pushed to the downside, just be aware this could be a level where we can potentially hold up for the week, okay? Unless there's something crazy is taking place and something bigger comes from this, quick and aggressive sell-off, which it was aggressive, it was quick, and it pushed us, below the gamma flip line. And we'll update this one come tomorrow, right? There's chances are as more volume enters the market, these levels will eventually change. If you want to be, this is where, like I said, once again, you got to be bearish with caution. But when this starts turning back, if this starts turning around, this holds its resistance, then you just got to pump the brakes, right? Be patient. We're coming into the end of the year. Volumes dry up at the end of the year. So it's a lot easier to manipulate the market. So be aware of this. If that was just a 0-date move to the downside, a 0-date option move, well, we can have a 0-date option move right back up to the upside, okay? So be careful there. I'll close off with a book map image. This is ES, and I'm just calling out a couple of levels that currently stand. Now, we talked about this yesterday, and we talked about a key level to watch for, and that was right around this area, I think it was, and we tagged it pretty much to pristine. It filled that liquidity, and we smashed back down to the downside. So the levels that we're watching now, 48.55 to the upside and 48.20 to the upside, those have a decent amount of orders. You have 500 right there, 500 right here, 500 plus. I mean, as far as to the downside goes, there's not really anything that stands out to me. So those would be the key levels, at least going into tomorrow. Remember, these orders can drop off by the market open. So I can't guarantee that these orders of liquidity will be here or who these people actually are. But as it stands right now, those are orders that are, above 500. So it's something to at least pay attention to. That's all I got for you on today's episode, everybody. Hope it helps out. See you later.